Hey, it's Amy Nicholas. Welcome back. Hey, it's Amy Nicholas. Welcome back. Talking about the stock market again and why is it a good time to invest right now? I'm going to give you three reasons. Just my own personal opinions, my own personal experience as an investor, and I have been investing in the stock market technically since 2006 when I started my 401k, but more actively since 2012. So here to tell you, based on my own experiences, having gone through bull markets, bear markets, had my money invested in '08, never even looked at my accounts back then, so really have no experience from that. But more specifically, experience from 2022. And I was steadily buying into the market, and it was kind of like one of these scenarios where you're like, okay, you put money in, and immediately the next time you log in, your money is dropped, right? No matter when you bought, it was going to go down. And I know a lot of people right now are probably pulling money out of the market and putting them into safe havens like, high yield savings accounts, CDs, bonds, the 10-year treasury bonds, things like that. And I am not necessarily condoning those things. I do think that there's wise places to park your money while waiting for opportunities. And right now, whatever you have, liquid cash available, for sure, keep them in something that's paying you automatic interest and high interest, not these Chase, Wells Fargo, Bank of America's 0.01% on your money. That's ridiculous. Yeah, put as little money into your regular checking account as possible because they're making a lot of money off you and you're making none. So number one reason why I think it's a good time to get started. It historically has never been easier for retail investors. That's you and me, not institutions, not banks, not these big corporations that have tons of billions of dollars to invest. But us retail investors, it's never been easier to get into the market. Like you can literally open an account on your phone and start investing money immediately into the stock market. Like it's so fast now. They'll connect your bank. They'll connect your funds will be available in most cases almost immediately to start buying into the stock market because these platforms like Robinhood, Webull, Fidelity, Schwab, Vanguard, they want you to start putting money in the market so they can make money off of you, right? So they'll make it so simple, and it's usually very, self-explanatory when you open an account that, you could start buying like index funds, ETFs, stocks, crypto. Some places, you can't buy crypto yet, or you can only buy certain cryptocurrencies. Like Fidelity, you can buy like the big ones, Bitcoin, Ethereum, and Litecoin, I believe. But aside from all that, it's just really easy now to do this, and in most cases, you can do everything from your phone, which is amazing. Second reason is right now you will have the advantage because the market is so up and down. You have the advantage of buying in, if you're consistent, of buying in at different price points. And a lot of times these days, you're going to be buying in and it's going to be on sale. Okay. We'll get into that in a minute, but buying at different price points. This is called dollar cost averaging. You are bringing down your overall cost to buy into the stock market. Okay. I am not a financial expert. I'm not, some advisor or anything. So do your due diligence, do your own research. I'm just sharing on these videos what I personally am doing, and I have had some experience in the stock market, so I'm just sharing from my own experiences on what I think is why I think this is a good time to invest. It's challenging, right? Because, like I said, back in 22, I saw this happening, and I'm starting to see the signs of it happening again. Not as bad as 22 yet. We don't quite know how far this correction is going to go, but the S&P 500 did close on Friday below a key level. So what does that mean? It means there was a previous area of support where typically the market was going to buy and push the price up again. The S&P 500 tracks the top 500 companies in the US. And, we've all seen this the last year and a half or so. Bull market, up, 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 some slight little dips, but up, up, up. Friday officially changed the game because it dropped below a certain key level that had not been broken for quite some time. Now it has officially signaled a change in the market. We all kind of saw this coming for the last month, but now it's official. So that means that the likelihood of us continuing on in this bull market has greatly shifted. But that's okay, because if you're an investor, that actually means you're in it for the long haul, right? You're not in it for a couple of weeks, a couple of months, a year. Like a year is really short in terms of investing. Typically my kind of perception of investing is you would be okay holding a stock or an ETF anywhere from 2 years to 10 years plus. Okay, so just kind of think of that in your mind that historically over time, the market has always gone up. You look back years and years and years ago, it was at a different amount than it is now. It does have pullbacks, it does have bear markets, it does have times where you're like, where did my money go? But historically, the more time you have in the market, the better, okay? So my third reason to buy now into the market is because you are going to get stuff on sale. Comment below if you were the person who looked at 2024 and said, you know what, everything is up, everything feels expensive, I missed the bull market, I missed the wave, I should have invested here, I should have invested there, and now everything's just at its highs. There was all these numerous stocks at all-time highs. And they kept hitting more of them, like Tesla, for example. They just kept hitting new all-time highs. And I know there was many people who saw that and said, you know what, I'm out. I missed the wave. I don't want to buy now because it's buying at the top, and I just don't feel good about it. Well, now is your time to start buying these stocks and these ETFs. I put my top 3 ETFs in the comments below. And these ones I recommend because if you're new or if you just don't want to spend a lot of time researching, these will kind of cover you, so to speak, whereas you're in safeguard area, dividend income area, and you are tracking the S&P 500 as well as getting growth. So when the market starts to move, and you see, the NASDAQ, is up such and such, you'll be in all 3. Okay, so number 1, VOO. This is the S&P 500 ETF by Vanguard. You don't have to have a Vanguard account. You can pretty much buy this ETF anywhere. But VOO tracks S&P 500. So dollar cost averaging, that means putting a little bit of money, consistently. I like to buy daily. I've started my own daily investing challenge. I buy $8 a day, every day, without fail, into VOO. Then the other one is VGT. This is the tech sector. This is the one that is going to be more volatile. It's going to go up and down more. However, it's going to grow more over time. So if you look back, VOO, you'll see something like around 80% growth in 5 years. VGT is somewhere around 150% growth. So by being in both of those, you got a little bit of stability and you got a high potential for growth. Now, don't be shocked if you start buying today and, immediately your money is worth less tomorrow. The market is volatile, okay? People are very uncertain right now. There's actually this thing called the Fear and Greed Index. No joke, look it up on Google. And it has shifted more and more into the fear territory, which means overall the people that are investing in the market or trading the market are doing so from a fear basis because they don't know what's going to happen. They don't know what these Fed rates are going to do. They don't know these jobs reports, all these things. There's a couple things coming this week. They don't know what happens when Trump becomes, inaugurated. There's a lot of uncertainty and everybody is turning that uncertainty into fear. So what does Warren Buffett say? He says, be greedy when people are fearful and be fearful when people are greedy. So what was he doing at the top of the bull market? Warren Buffett was cashing out and cashing out big. Billions and billions of dollars into cash, which of course he always has cash on hand with Berkshire Hathaway, but he moved significant more amounts of money into cash very recently in the last like 2 months. He sold off a lot of Apple shares, a bunch of other things, and that should just tell you right there, okay? If the best and greatest investor of all time, pretty much, is moving into cash, there's a reason, right? He's poised to make himself ready for opportunities, okay? And of course, he's always on the lookout for new business. So again, the 3 reasons. 1, it's never been easier. You can open up brokerage accounts like in a couple of minutes. You can open up a new retirement account, whatever you want to do. I'm not here to tell you what to do. I personally have 2 IRAs and I have multiple individual brokerage accounts so that my money is more liquid. I don't have to pay a penalty if I want to cash out my stocks and take the money out of my account. So personally, I don't put any more money into my IRAs because it just doesn't make sense for me to. Secondly, you can basically just keep buying into the market right now at different price points. It's very volatile. It's up and down, up and down. To try to time the market is going to keep you out of the market. You're going to miss the chance to start growing your money today. Is it going to grow immediately? No. This is a key component because most people will freak out. They'll put some money in the market and they will stop being consistent because they'll be like, well, hey, I've been investing for a month and I have less money than I had to begin with. You're not an investor then. Like, get out of the market. This isn't for you. You have to be willing to just see your money go downhill and not care because you're in it to win it, right? And number 3, you're going to get stuff on sale. You are going to get stuff on sale right now. For example, not even a month ago when I started buying into VGT, and this was even before the daily investing challenge, when I started buying into VGT, I remember the price was around $6.46. And why do I know that? Because I actually went into my account and saw the different price points, what they call them lots, that you buy at. And I saw that was one of the top prices I had paid for that ETF. Now the ETF is, last I checked this morning, was about 602, 603. Okay, a $40-some drop, right? Now, that might sound even pricey because you're talking $600-some for, an ETF. That's like, whoa, That's okay. You do not have to buy a whole share. This is one of the reasons I think people don't even get started with investing because they think they have to buy the actual entire one share, whatever that price of that stock is. No, you do not. Most brokerages will now allow you to go into your account, switch where it says shares, like how many shares you want to buy, switch it. There should be like a toggle, some little off-on switch to dollars. Okay, this is what I do for my daily investing challenge. Is I switch that thing over to dollars and I put 8.00 and then I buy $8 of VOO and I buy $8 of VGT every day, Monday through Friday, or if the market's closed on a holiday, the next day. And that just makes it so much easier because you're all of a sudden you're not like, oh shoot, I just put all this money in. Because $500-600 a stock or an ETF, that's a significant chunk of change for people, and then they only own one share, right? So just do it dollar cost average. Pick a number that you're consistently okay with. I personally like to invest daily, and I encourage people to invest daily because I think it creates a really solid habit, and you're also getting stocks and ETFs at different price points every single day. And if you could do this weekly, and some brokerages will only allow you to set it up weekly, but you could try to time the market and you could potentially be buying at the high of that week. I know, because that's what I was doing for a while. It's like, oh, let's always buy on Friday because that's my consistent day. And it was always up on Friday. And then Monday, you see your investment. You're like, dang it, I should have bought on Friday. I should have bought on Monday. And then it could flip on you. So what I like to do is daily, just set it to daily. There's a couple of brokerages where you can do this on automatic, and there's some that you cannot. Like Fidelity, where I started my challenge, you cannot. I have to manually go in there and say, buy $8 every day. Robinhood, you can do it. I believe with Moomoo you can do it, and possibly Webull. I don't think you can do it with Schwab. I haven't checked, but yeah, and Schwab also, by the way, has limitations on being able to buy ETFs fractionally. I don't know why. But my favorite have been Fidelity and Robinhood to buy fractionals, they call it. You're just buying in dollars and not buying a whole share. That's what it's called, fractional shares. So that's just, my 2 cents. I was gonna share this. So back in 22, I remember logging in. At the time I was using my Schwab account. I was logging in once a week or so, and the market was poop. It was absolute poop. And I was like, okay, I should keep investing. I know better than to not invest. It's down right now, but I know it's going to come up. By that point, I had been active in the market for about 10 years. So I had seen things come, go, up, down, up, down. And yet it was still very painful to log in and be like, okay, I'm going to buy, but I know next time I come in here, it's going to be lower, and I'm actually going to lose money as soon as I buy this. And I still did it. I said, Amy, just have the discipline. Just come in here consistently every week. So during 22, I was actually pretty consistent, on a weekly basis, buying. At the time, I think I was mostly buying IVW, which is just like VOO. I switched to VOO because the expense ratio is cheaper. You pay less fees. But it was basically the same thing, track the S&P. And I remember looking back, and I looked at my lots, and I looked at all the prices I had paid for this stock, dollar cost averaging, $20 here, $50 there, whatever. And I looked back, and it was like, the stock was currently, I don't know, one day it was at like $52. And I had bought at 65, 66, 63, 60. So my money was just constantly going down every time I was buying because the market kept going down. And I was like, okay, we're just going to keep doing this. I know this is going to one day be different, right? I didn't know when. I just knew I was going to be in it for the long haul, and that being invested, more time in the market is better than trying to time the market. Remember that. It's a great quote. And then a year later, 23, I'm looking in there and I'm like, oh, okay, cool. Like we're in the upper 60s now, and I was like, some of these shares are break even. I'm not negative. And some of them I still was, but I saw, things starting to turn around. And I remember looking back too, and I was like, oh, wow. One of the shares I had bought was when it had dropped a lot. It was like $40 some a share. And I was like, whoo, I'm up like $20 on this one, right? And it gave me confidence. 23 was still a little bit like, where is this market going to go? So it's kind of like, is it going to be up continually, or is it going to come back down to these numbers? But it gave me hope, And then 24, as we know, it turned into an entirely different story. It was literally, you almost saw the switch turn on, like beginning of the year, kind of, after October 23, November 23 was when things really started to kick up. And the next time I'm logging in, I'm now, got many shares of this IVW. I think I had something like 50 some shares because I was consistent. I kept buying it, even though it was tanking half the time. And I remember looking at it and I was like, oh my freaking gosh. It was in the upper 80s, pushing to $90 a share. And like I told you, I had been buying anywhere from 40 some dollars to 60s and 50s. And I think the highest, because I had taken a break for a bit, the highest I had bought at was like 69, 70, something like that. And now it was like almost $90 a share. And I was like, I had saw it when it was negative, and I kept investing and I kept investing and I kept being consistent. I just kept telling myself the story of it's going to turn around. It's going to turn around. It's going to turn around. I don't know when, but it's going to turn around. And to see it turn around and to literally double my money on some of these shares was just the greatest feeling in the world. Like, I wanted to just pat myself on the back for being like, just so thankful that I had the faith and I kept the faith to keep investing. And I was able to cash out the end of 24 at its high and take a great profit. I've been investing for about 2 years into that thing, and I could have held on, but I'm glad I cashed out now because it's going down. But I got it at almost the high. I doubled my money in some cases, and I was just like, dang, this was a really great learning experience. Because if I hadn't did what I did, I would have never seen that result. You know, I would have just come in maybe when the market was starting to go up, and I would have started buying at the highs and, you know, 70s, 80s. Oh, it's going up. Let me jump in. And if you're consistent and you just dollar cost average, you're going to catch the highs and you're going to catch the lows. It's just going to happen both ways. And in many cases, if you're just consistent through these like seemingly downturns in the market, this might turn into a bear market. We don't know. But if you're just consistent, you're going to look back in, who knows, a year, 2 years, 3 years, whatever it takes for it to be a straight up bull again. And you're going to be like, oh my gosh, I'm so proud of myself. I'm so glad I kept the faith. And if you just look at the charts historically over time, the S&P 500, up. You know, you of course see those dips and you're like, woo, that was a drop in, you know, 2008. That was a drop in 22, and, you know, there's a couple other ones. But you're going to see that trend line is always going up, okay? That's what you just have to remember, right? Time in the market is better than timing the market. So I'm going to leave you with that. Y'all have any questions? Pop them in the comments. Leave a like if you enjoyed it. Follow me if you want to see more of these videos, and I'll see you on the next one. Take care.